4 a.m., a time for silence, a time for sleep. But at the headquarters of Meta, it was the perfect time for the digital guillotine. Thousands of employees woke up to find their access revoked. Not because of poor performance, not because of a company collapse, but because of a spreadsheet calculation executed in the dark. To the public, it was a tragedy. But to the chief financial officer, it was a structural reset. Welcome to the new reality of the American workforce, where your tenure is not a value. It is an overhead cost that investors demand to be liquidated. Let's audit the numbers. Why 4 a.m.? Because the market never sleeps, and the pre-market trading session waits for no one. Before the stock exchange bells rang, the goal was to signal efficiency to Wall Street. The moment the layoff news broke, the stock jumped. Why? Because the market does not trade in humans. It trades in capital efficiency. Meta didn't just fire people, they slashed cost of revenue. They converted payroll liabilities into immediate share buybacks and future AI investments. It's not corporate cruelty, it's high-frequency financial engineering. But do not be fooled into thinking Meta is an outlier. This is a synchronized corporate choreography. Look at Google, look at Amazon, look at Microsoft. They all cut thousands of jobs. They all pivoted aggressively into AI. They all reported record efficiency to their shareholders. Why the uniformity? Because they all dance to the same tune. They answer to the same institutional investors, the massive funds that dictate the rules of the game. When Meta strikes at 4 a.m., it isn't just Meta. It is the sound of the entire tech industry falling into line, trading human capital for algorithmic supremacy. Here is the brutal truth that headlines miss. Meta is not running out of money. They are simply reallocating it. They are gutting the human infrastructure to feed the GPU infrastructure. Think about it. Why pay for a human software engineer's health insurance and salary when that same capital can buy hundreds of NVIDIA H100 chips that don't need sleep, don't need a bonus, and don't take lunch breaks? This is the great pivot. Silicon Valley is selling its soul and its employees to chase the AI gold rush. The era of corporate benevolence is dead. We are living in a system that optimizes for short-term shareholder value at the expense of long-term human stability. If you think your job is safe because you work for a profitable company, you haven't looked at the ledger. They don't value your work. They value your cost-to-equity ratio. Audit the numbers they hide in the restructuring reports, and you will see the truth. Subscribe to Inside Hayes Mind. We don't follow the noise. We audit the reality.